Hello and welcome to our episode of FinTech Focus TV with me, Toby. Today I am in New York City and delighted to be joined by Glenn and Nilesh from OPCO. How are you guys?
Very well. Good to see you.
Great to see you.
Nice to see you.
Thanks so much for inviting me into the offices here, and lovely to meet you both in person. Glenn, we've met before online. Very, very excited to hear a little bit about the story. We're going to talk about OPCO. We're going to talk about the origin story. We're going to be talking a little bit about the world we live in at the moment in this capital market space. I think we all live in a very similar sort of area, and have a lot of, as we found out, a lot of common practice and common people in that we know. So lots to dive into. I'm looking forward to the conversation, but let's kick off with a couple of introductions. Tell us a little bit about yourselves and the business. Nilesh, let's start with you, shall we?
Sure. So Nilesh Nanavati, I have about 28 years of experience in financial services. Primarily started my work with Ernst & Young, management consulting, focusing on financial services. Then was an entrepreneur running an EMS, OMS business for a number of years, and then subsequently went into the advisory business again, and I've been consulting with FinTech firms for almost a decade now.
A great pathway all the way through. It's a virtuous circle. And Glenn?
Yeah, so I'm lucky to have had a 30-plus year career in the industry and just lived through so many dynamic times. So the first decade or so, I focused on global equities and particularly covering Asia, which was a brand new frontier at that point. So really, actually, I traded equities all over the world before I traded my first U.S. stock about 10 years later when I moved home to run international desks. So say, call it the first 10 or 12 years, living through some dynamic times as international investing became much bigger in the U.S. I then moved into electronic trading in the middle of the 2000 decade, perhaps just following the tide. I think that's the way the world was going.
Yeah.
I joined Instinet as an executive, focused on cross-border. At the time, electronic trading had been a little bit more well utilized in the U.S. than it had been overseas, and that turned out to be very exciting as well. So, during that period of time, we were bought by Nomura. You certainly saw a move from active investment to passive and quant investment, a trend that we helped Instinet. We really leveraged through some of the products we had, and I finished that off with a stint in Asia where I had lived before, integrating Nomura's business into Instinet, which was again, very interesting and exciting project. Came home, worked at Instinet for a little while longer. I then decided to make the first big move in a while, which I moved over to Bloomberg Tradebook to become a global CEO there. Yeah. So it was fun to run a global business. Learned a couple more asset classes. I had mostly been listed securities focused, but at Bloomberg I learned a few more. Learned about what it's like working at a big fintech firm, which is quite a bit different than working at a broker dealer. And actually, did one of my a couple big projects along the way there, which was taking a homemade tech company where we had built all our own routers and algos and moving it into a best-in-breed tech where we started using external providers. And during the course of that, I met the fine folks of Dash Financial Technology and really fell in love with their tech, and I joined them. And it was a great options platform. They were integrating two really good complementary businesses and had just been invested in by a private equity fund. So I had a really nice ride there, learning some new things, corporate development side, buying companies, helping get your company sold, and eventually we were able to sell Dash to Ion. At that point, I became a free agent, and that's when I hooked up with Rishi and Nilesh at OPCO.
Great buy. Great free agent. brings them straight in. So, and look, when you talk about the business and the experience in the business, it's a great, really complementary group of people that have sort of come together. So let's go to that origin story. Nilesh, tell us a little bit about OPCO, and I've actually just found out today what OPCO actually means as well. So tell us the origin story and break that duck for those people who've been trying to work it out and frame what OPCO actually means as a company.
Sure. So OPCO is a generic name. Many things are named OPCO, as if you've ever read a redacted legal document. So, but OPCO to us has a meaning, and that meaning and the genesis of OPCO comes from operating partners catalyzing outcomes. And the mission behind why we created OPCO was to really create a set of services which would help catalyze outcomes for our audience, our clients, and those clients being members of the capital markets ecosystem. And we can go further into that. But the idea was a set of operating partners or a set of individuals coming together with operating background, some with advisory background, and almost creating a new model of servicing the capital markets ecosystem.
And in this capital markets ecosystem, we're seeing probably now more so than ever, over the last 20 years, we've been seeing so much innovation, so much growth, so many new companies come into marketplace. And there are those who come and fly, and companies, it's an acquisitive space, and we see, companies acquired at various different stages of their growth. And there's been a lot of raises over the last, well, particularly between 2020 and 2022, and a little bit more over the last couple of years. But it's about being set up for that sort of success and failure. And when I look at some of the people who we've interviewed on this show, from some of the people I've worked with over the last 20 odd years, there are certain people there who absolutely fly from it, and there's certain people who join companies and struggle a little bit more, because maybe it's the first time they're founding a business, maybe it's a stage there where they come from a sales background or a product background or a tech background, et cetera, et cetera. It's a difficult set of skills to bring together. And I guess this is where you guys, with the experience you just mentioned, plus the rest of the team as well, are able to come in and be the sort of Sherpa through that sort of journey. So tell us a little bit about the sort of work that you guys are doing and what sort of companies you're helping.
Why don't I jump in on that a little bit? So in addition to Nilesh and I, you have Rishi Nangalia, who was the CEO of the business himself at Ready and had a long track record at Goldman Sachs before that. And Ready was eventually bought by Refinitiv. Mike Root, who works with us, has a very similar background. We've recently added a fifth partner, John Stefani, who has a deep background working both directly at banks in their technology and operational divisions, as well as advising them on tech as well. So I think all of us have been through a lot, and I think that really matters. And we were talking a little earlier just about change, and most of the projects we do involve helping some kind of organization to either do something new or change something about what they're doing. And I think we're not just advising people. We don't throw a 20-page deck on their desk and say good luck. We have the experience of actually delivering projects in dynamic environments, all of us. And so I think that culture from the top and to the rest of the great people that we're working with here, absorb that, get it done culture. So, so we are action oriented, not advice oriented. And OPCO, operating partners catalyzing outcomes. That's where OPCO comes from, and that's what we try to do. I would argue that we started the company as almost an empty whiteboard saying, hey, we've got these skill sets and these experiences. We can help people in the capital markets fintech world, but I'd be lying if I said we knew exactly how we were going to help them. And 5 years in, when we started, and 5 years in, we've really evolved into 3 very specific practices and a couple of affiliated companies that we've started as well. And maybe I'll
so I mean, and I would agree with Glenn. I don't think we had a sort of broad vision of where we wanted to go, but I think over the last 5 years, 2 iterations, we've refined that vision into the 3 broad service areas that we operate in. So the first one is what we call strategic collaboration, where if you think about one form of innovation that large banks or large financial institutions are undertaking, it's through collaboration. And so we've helped launch successfully several consortiums, one being Optora, another being Versana. These are all in different asset classes, but the idea is that it's one form of innovation that we've helped catalyze. So one part of our services vertical focuses on strategic collaboration, to bring new business models in a very collaborative format with financial institutions. Our second business is called FinTech Scale, and maybe I'll ask Glenn to maybe expand on that.
Yeah, so from the day we set up this office, we had emerging fintechs coming to us through our network. And that was probably the one that took the longest to gestate. How can we help these emerging fintechs? How do we vet them to bet on the right ones? They need capital, they need introduction.
And so is that you bet on the right ones to work?
Well, meaning to work with or to invest in. There's different models that we've tried. So at the end of the day, I would argue, and I estimate that I probably personally met over 300 emerging fintechs since we started OPCO 500 years ago. Most of them coming from our dear friends from our network, from people who know us and say, hey, these guys can help you. They know Nilesh, they know Rishi, they know Glenn, they know Mike, and they come to us. But it took us a while to really discover how we could best add value to them. And really drive value for them so that they could afford to pay us at the end of the day, because emerging fintechs don't always have great budgets. So fintech scale took the longest to gestate, but it's become a really popular offering, which basically is we help emerging fintechs scale their business by virtue of our expertise and our network. That's like the quick and easiest way. So it could be anything from, we can review how they're going to market, what their communications are, what segments they're selling to, and give them advice anywhere from strategic advice on product market fit or how to reach out to different people. And then, once we've helped them discover a strategy or create a new strategy, and then we help them execute it. So we utilize the network that we have and some tools that we've built to optimize their engagements, with potential clients, potential sources of capital, potential sources of partnership, all three of those, and in some cases, finding talent as well. Sorry about that, Toby. But at the end of the day, people. So we've worked hard to just really have a valuable offering. So you think that all sounds valuable, but if people are going to pay us on a monthly basis to do this, we've built some really valuable collateral. So we have the Finoptic database, which Nilesh will talk about a little bit more when we talk about our domain practice, which has it's a database of 4,500 capital markets fintech companies with a modern taxonomy, which Nilesh and his team have created, which is fantastic. So people can learn. They can see what the outside world thinks about them through these reports. They can find out about competitors and potential partners through these reports, and they've got great value to our domain business as well. We're developing the Connectic database, which is 31,000 capital markets professionals, and you can search in sort of how OPCO knows them, that are all people that we actually know, that are on our respective LinkedIns from our team. We built a team of which you can see Danny right there, Danny Hayden, who I want to give a heads up to, of 6 dedicated, go-to-market experts in financial technology, 2 in the States, 2 in Europe, 2 in Asia, plus another 5 or 6 in our network doing this on a part-time basis to help reach out and add their contacts to the mix as well. We have the partnerships we mentioned before, so we're working with Hedge ID to make sure that we've got great prospect database across the industry, and MythMaker, who is a really fantastic digital marketing firm who can help our clients and improve their digital messaging. But just like us, they're also execution focused, so they can help them execute a digital marketing plan. So when you add all these things together, people find it really valuable, really worth paying for, and it's keeping us super busy lately.
I think it's such an important problem there, and we'll come to that third piece in a second. Sure. Hold that thought. But as you're talking, I'm thinking about some of the sort of larger consulting businesses. You get that sort of, there's a piece that comes in, but I love the niche aspect of where you talk about the expertise. And it feels like you're not going to just have the partner come in, make a business, and then feed it out to a bunch of grads, etc. This is about actually happening well with you. It almost feels like, right, you're right, there's the VC and investment side of things, but we're also then coming in there and taking the journey further forward, helping people to navigate a lot of these difficult things, which actually people aren't thinking about when they've got this product that is so exciting and game-changing. You're not actually thinking about capital raise. You're not actually thinking about the next sort of phase. I mean, you're not thinking about where the bumps in the road that come through from. You're not thinking about the procurement cycles in this capital market space that suffocate so many different businesses. And I think this is a really valuable piece that comes into. Sorry to jump in. Let's go to point 3.
Sure. So the third service vertical is really where we work with investors, whether it's growth equity investor, whether it's private equity investor, venture, and we help them in different ways. So one is we help them with the due diligence. And so if you look at an average sort of acquisition process, right, we are not, as Glenn said earlier, we're not the guys who are going to put together a 90-page PowerPoint deck and then walk away just by giving you the size of the market. We're usually the guys that PE firms call for real sort of market intel, real color on whether it's the individuals running the businesses they want to buy or the products that the businesses they want to buy are selling and the real sort of feedback on that. And so if you think about the deep market knowledge base, know-how, domain, that's what we provide, right? So that's one aspect of what we do with investment community. The second aspect is where we work with them, where we might see an opportunity to create a theme for investment, right? So it could be a roll-up, it could be a consolidation, it could be a combination of adjacency or complementary technologies to put together a full end-to-end solution. So that's the second aspect of how we work with private equity firms. And then the third is really after they acquire a portfolio company or once they inherit the portfolio company, working with the management teams to think about, maybe performance improvement areas, or also going back to the FSS, because some of the clients that we work with are fairly large FinTech institutions who have another need, which is inorganic growth. So we help and work with their corp dev teams to identify interesting opportunities for them to acquire.
I'm just so enthused by this thing, everything you're talking about here, because again, one of the things I think that's so interesting about this space is how decisions are made around investment. When you talk about C, when you talk about Series A, when you talk about Series B, there's a huge dropout, huge failure rate within those businesses. And I think quite often it's about people, this is my view, and I'd be interested to hear your take on this. Quite often this feels like people are doing because they need money, because they can feel the sort of runway disappearing and they need to bring it on. So they take anyone as opposed to the right people. And that investment goes into the right thing. They're under pressure to invest at various different phases. And the partnerships are never set up to succeed. So I think just as much as getting your cash in is important, actually getting the right cash in and the right partner is important. When you get that bit right, the whole thing can move further forward. And I just think the due diligence around that sort of space is something that's been missing in the industry for ages. I'm assuming from that business model, you guys are agreeing with that.
So we've had situations where we have been invited and we've advised private equity businesses or private equity investors, and we've been part of a bigger cohort of other advisors. But our value has been very, very clear, which is to provide very deep and narrow expertise in capital markets, right? And on companies that the investors care about, and the type of color that will really help move the needle for the investor, right? And it's kind of the aha, I didn't know that.
Yeah.
Right, that's the piece that we're aiming for, and we're able to deliver that because of the lineage or the background of individuals who worked in the capital market space for 2 to 3 decades, right, have relationships, right, and are able to, right, and have the scars to say, please don't go there because this is the scar you will get.
And I think it's interesting around this because things are evolving at that pace. There's opportunities that sort of change ever more. And when you roll back 5-10 years and the marketplace was, well, this is what you do, you follow your structure, and this is the strategy, and that's your business model. And if it succeeds, it succeeds. If it doesn't, at least you try and put everything into it. Right now we're seeing a lot more agility, I think, in fintech businesses. The need to reposition at various different stages and to take all that sort of stuff on. That creates complexity in its own right. That creates problems for it. So when you were looking at some of these businesses who you were advising, both in all 3 areas of that sort of business, what are some of the common sort of themes that you're seeing recur and people are struggling with, and as I say, how you can help them through them?
Well, I do think that there's certainly on the bank and large asset manager side, there's risk aversion and long sales cycles. They are dealing with their own tech deficits to an extent, and really nervous about and replace and about changing, making wholesale changes to their platform, even though to a degree they know that's what they need.
Yeah.
The second thing I'd say is, we're in the age of the roll-up, and the firms out there are losing leverage with their suppliers. At the end of the day, you look at Broadridge, or if you look at an SS&C or an Ion, they're really have a lot of leverage with their end clients. They're extending contracts multiple years, and can some very threatening behaviors if people try to change. So there's a lot of angst amongst the community facing those two things. And then the third thing is just
sorry to interrupt you. I think that sort of fear of actually changing that sort of stuff and being, you want to be pioneering, but the industry is pretty harsh on people who've made a mistake on things, isn't it?
They always used to say, in the 80s, you never get fired for hiring IBM, right? But I think we're really transitioning away from that. And I think the need, which is, this is kind of one of the needs that we thought 5 years ago that we could kind of step into, which is, okay, so you take that, number one, less leverage with these rolled up providers. You take number two, which is, the fear of change and risk aversion. And then the third thing is, nobody with AI and with the potential transition to digital, slow or fast, and it changing all the time, the legacy platforms are not necessarily built for tomorrow's tasks. So, when sort of rolling that all into our minds, there's a few different things that come to mind. So, for example, composability of technology. So we talked to the technology partner to talk to, you should be able to solve a single problem for somebody and be able to land and expand. Don't expect to people to be ready to rip out an existing provider all at once. Secondly, make sure that your platform can handle or is built or architected properly to be able to have the flexibility to handle new asset classes. I mean, nobody needed an order management system that could do both public and private 20 years ago. Nobody needed to figure out the different digital securities and coins even 10 years ago. And many probably don't today, but will in 10 years. So I think, the flexibility with which you architect your platform and the composability so that you could deliver your solution to solve a single problem and get in while not having to ask a client to rip and replace, or, a couple of the things, that we try to help them with. Because as you said before, the sales cycle can bankrupt you. Yeah, it really can.
There's what Glenn talked about, and I think there's another sort of another growth plane that's developing, right? So if you think about the Genius Act, the Clarity Act, we recently did a paper on tokenization. What the case around crypto, DLT, you're all familiar with, but what's interesting is it's when there's regulatory catalysts in terms of clarity in this country, at least in the U.S., around how to sandbox and operate within a structured environment to test tokenization capabilities, is when growth is sort of starting to take off, right? And you're going to see that across the world because other countries are obviously creating their own sandboxes, right? And so there's that component. So that will drive further growth into new innovation areas, right? The other area that we've been exposed to through some of the companies, and there's one company that we're involved with, where they're just starting to embark on power trading, right? And if you think about what the world of power trading looks like, as in electricity trading, right? It's very regional. It is, given what's going on, at least in the non-US aspects, between the ESG movement and going green movement, I think it's also creating new markets for trading power. And given what's going on in the AI world and the power consumption related to that, that's also driving another creation of these marketplaces where power will become more of a trading asset, right? And so those assets that you didn't think about, sort of very well-functioning markets around, those are now starting to come in the forefront. And then those assets which you couldn't initially market, right, because of friction around, the processing of those assets, like art, we've seen, right, or anything else, from diamonds to you name it. And so with tokenization, those assets are now becoming more tradable, right? And so between those things and then things like the 401k Act, that's driving a lot of momentum, right, into what Glenn was saying earlier around, newer assets, newer capabilities that clients want in order to win more clients, win more end users, to drive more volume.
And that's another big thesis on which we started the company on is the marketization, or some people say equitization, of other asset classes. I think digital is a big part of it, but there's other elements of it too. We're working with a company that's bringing electronic trading techniques into municipal bonds, which trade on bulletin boards. We're speaking numerous tokenization plays. Having had this listed securities background that most of us have, equities, futures, options, now sort of translating what we've seen, over the last 28 to 30 years in market structure and applying that to what's happening in all these other new asset classes. It's very interesting. And then the platforms people use are really going to need to be flexible in order to manage that. We haven't even mentioned private investment now too, but if you look at it, there's some of the biggest hedge funds, some of the big asset managers are now both buying public and private. And they're buying private equity funds, but they're also buying private securities at the end of the day. And, it creates new technological challenges that the legacy platforms aren't necessarily set up for.
Yeah, I think that's so important, isn't it? That these legacy platforms are not a monopoly in various different stages. And you say there's a lot of pressure to keep them in there. It's difficult to remove. But if you're able to build this patchwork as we get in there now, and this opportunity to say, look, in our everyday lives, we expect interoperability on every single aspect of our day-to-day, you already have more in this industry. It's created a lot of opportunity, but people have to think in a different way about how they're going to get through the various different, the various ways of getting an institutional client on board. You have the best idea in the world, but if that idea runs out of money before it gets to the stage where someone actually signs, which can be we've all known, an 18-month, 2-year process at various different stages. What is the route to get to that sort of thing? I think that's where it becomes really interesting. And I want to bring into a question I'll ask, which is where you mentioned 3 big companies beforehand. You mentioned the sort of due diligence you were doing for advisory for investment companies, PEs, VCs, etc., etc. When you're looking at these businesses and say, right, this is what we're the ingredients, the sort of golden thread of companies who are going to make it in this space, the ones who you back at, the ones you've seen, the ones who've been the most successful, your stories with your businesses. When you're sat there and saying, this is some of the core elements of what they need to be thinking about or they have in place. I've spoken to VCs my entire career, and I think they always talk about the market, with the size and scale of the marketplace. They talk about the team that are able to get through it and track record, they've got profitability, etc., etc. What are you guys looking for? What do you see as the sort of magic behind it? I'll spoke to you to me.
Well, so I'll start with saying something like, I think in capital markets, the addressable market size is vastly overrated.
Is that right?
Yeah, I think that's more of like retail products and things.
Yeah.
I think at the end of the day, you have to develop something innovative with a moat. You have to show up with something that they don't have, that they have. It has to, and it is a compelling argument for you to build it rather than for them to build it themselves. Yeah. And you have to address the market at the right time. I've seen so many people addressing the market far too early.
Yeah.
And I'd say one other, the talent and flexibility of the management team, not only from building a great product, being gritty enough to see it all through, but being flexible enough. I mean, I'll tell you, I meet when I meet an inflexible founder who's got to do it this way, I always, I think
Is that ego? Is that?
I think it to an extent it's ego, it's fear of giving away IP. Because the biggest trick, you mentioned something interesting before, like people are just throwing around ventures with each other just so they can add a logo to their website. Like we've got a channel partnership with them, and we're just piling these up, and no one ever does anything. But a really well thought out channel partnership with the right partner who's got not only clients, but MSAs and agreements with clients you can leverage. It's just, to our mind, it's an underutilized tool.
Yeah, I mean, that's one of the reasons, and I think Glenn's point is very well thought through, because he said something, compelling value prop, right? So compelling value prop, many times we find that the fintechs that we're working with, they think that the compelling value prop meaning their product. I don't think it's just their product. I think it's a combination of all these things that Glenn was talking about, and being able to sit in your product buyer's seat and design a value prop that addresses not just the technical side of the product, but the economic side of the product, the behavioral side of how the product will be consumed in the organization, right? And what decisioning process that buyer will have to go through in order to consume your product is it's what really we mean by compelling, right?
Yeah.
Because, and many times we see that the fintech executives we work with, they are only seeing their own product and its value prop to the organization. Now, the product may be very good, but does that mean that it will be used or bought or consumed?
Yeah, then they put the blinders on because they're so consumed with the value of what they've delivered, like it's their baby and their baby is beautiful, right? And at the end of the day, so we've created an intake form actually for our emerging fintech clients, and we make them talk about all the things they don't want to talk about. Who are your competitors? How else are they solving this problem? Because what they'll say naturally, if you don't there are no competitors. Nobody does what we do. But obviously, the world has in fact, gone on without them, right? At the end of the day, and so we're not necessarily spawning in capital markets fintech. Not everybody's going to be a Robin Hood or at the end of the day, we're spawning really practical, valuable businesses that could help with tomorrow's problems. And in our world, you don't need 1 million clients. You get 10 good ones, and the most likely outcome for them is they should really build themselves to be strategically attractive, because the market for capital markets fintechs is heating up lately, and there are the medium-sized firms are all looking to acquire, and the big firms are definitely looking to acquire, and as we've seen, and there's also private equity firms in the mix competing for it too. So make yourself strategically attractive from the start to somebody.
And the thing on this, I'd love to share with you. So one of the things of having done 600 episodes is you get a really interesting view of various different people's background, what makes them tick, and actually what makes a good founder. And I've seen more and more people coming from a product background, so chief product officers, coming through and starting out businesses you've gone through. And as you were talking there beforehand, I was thinking about how a product background means people are thinking about all of the challenges you've spoken about beforehand. And it's become much more of a trend that the people who are coming through and thinking, having investment and thinking the rest of the way are product first, client first businesses, as opposed to here's my great shiny piece of kit that I think is fantastic. I'll become a technical evangelist about that's all, and you should buy it, without actually thinking, is there a problem that really needs to be solved? And that feels like a very product-led mindset, or just a thought to throw out there and all. I want to finish off just by talking about the business itself. So you mentioned your areas where you're able to help and the things that you do. for people who are watching this now and thinking this resonates, there's a lot of reasons where this should resonate, in my opinion, from it. Who should be reaching out to you, and what is the best way for them to get in touch with OPCO?
Well, I mean, I think that chances are that the people who are watching this, they probably know someone who knows OPCO. So that could be obviously word of mouth is the easiest way, but you can reach out to any one of us through our contacts, email on our website.
There's a lot of network going on here, isn't there?
Yeah, but we also we're pretty regular about having events on a quarterly basis where we had.
Last week, it did fantastic.
Yeah, turned out, and you must have seen some of the pictures on LinkedIn. But it was very good, and we are fostering a community, that is ever expanding, right? So it started off with our own friends, but then new folks join in, and we meet new people, and so to answer, the best way is just to pick up the phone, call us, or reach out to us by email, and we're pretty, as I think you said, and I think Glenn was saying earlier, that we're very, very client-centric, right? So, we always want to see what's out there, what's new, and who's catalyzing outcomes.
And I would just keep it simple in terms of when to reach out and sort of point back to the 3 business lines. So if you're an investor, whether you're running a corp devs team or whether you're a portfolio investor and you're considering investments in capital markets, fintech, we can help you. If you are a fintech who's looking to grow and scale their business, if you're not achieving every goal you have, you think there's something new you can be doing or different you can be doing regardless of your size, we feel like we can help you. And I think that the last case is whether you're a single firm in an industry or a tech provider that has a collab idea, so something that maybe makes sense to be a consortium rather than be taken on alone, we can help you there as well. So those are the 3 kind of predominant use cases of ways we can help people.
It sounds compelling. I've loved the conversation. I've been sort of nodding and smiling as you've been talking all the way through this fantastic conversation. So thanks very much for coming.
Thank you, Toby. Thanks for coming over.
Thank you.
Lovely to see you. And thank you all for watching. We will see you soon on the next episode of FinTech Focus TV. Thanks a lot.